In 2008, countless investors poured their savings into hedge funds that were said to be risk-controlled. Like favorite follow. Into hedge funds that were said to be risk-controlled. Like favorite follow. These funds used complex models to calculate the probability of a once-in-a-century loss as virtually zero. Like favorite follow. As virtually zero. Like favorite follow. But a subprime mortgage crisis wiped them out overnight. Like favorite follow. Those market fluctuations judged to have a minuscule probability like favorite follow actually happen every 10 years or so. Like favorite follow. In 2020, the pandemic struck without warning. Like favorite follow. Industries like catering, tourism, and offline retail like favorite follow, considered to be low risk like favorite follow, suddenly ground to a halt. Like favorite follow. Countless businesses went bankrupt. Like favorite follow. The stable operations meticulously planned like favorite follow proved fragile in the face of extreme events. Like favorite follow. These seemingly accidental low probability events like favorite follow, once they occur like favorite follow, can shatter all your original expectations. Like favorite follow. This is the fat-tailed effect. Like favorite follow. You might say like favorite follow. Studying these extreme low probability events is pointless. Like favorite follow. But Taleb will tell you like favorite follow. You're dead wrong. Like favorite follow. You're using the wrong framework to understand the world. Like favorite follow. The vast majority of the real world like favorite follow is shaped by these outliers. Like favorite follow. Welcome to Uncle Das Financial Diary. Like favorite follow. Today the book we'll delve into is Like Favorite Follow. Nassim Taleb's Fat Tail Effect. Like favorite follow. We tend to assume the world is normally distributed like favorite follow. Just like height and weight like favorite follow. Fluctuating around the mean most of the time like favorite follow. With extreme values being rare and having limited impact. Like favorite follow. The tallest person is only a little over 2 meters. Like favorite follow. The difference from the average person can be quantified. Like favorite follow. But in the core domains of the real world like favorite follow. From wealth distribution to disasters like favorite follow. From market fluctuations to industry booms and busts like favorite follow. We see fat-tailed distributions. Like favorite follow. The impact of a few rare events like favorite follow far outweighs the sum of all everyday occurrences. Like favorite follow. Buffett's investment returns like favorite follow didn't come from countless small gains like favorite follow, but from the explosive growth of just 10 stocks. Like favorite follow. In the 112 years of the US stock market like favorite follow. If you missed the 10 best trading days like favorite follow, your total return would be reduced by 2/3. Like favorite follow. These low probabilities like favorite follow are the true determinants of the final outcome. Like favorite follow. We always mistakenly believe low probability means low impact like favorite follow, forgetting the iron law of the fat-tailed world. Like favorite follow. Extreme events occur with low probability like favorite follow, but once they happen like favorite follow, their destructive power can offset all previous accumulations. Like favorite follow. This cognitive bias like favorite follow makes us helpless in the face of black swans again and again. Like favorite follow. But what Taleb wants to tell us in the fat tail effect like favorite follow is not how to accurately predict these small probability events. Like favorite follow. After all, extreme events like favorite follow are beyond the scope of conventional models. Like favorite follow. But to first break the misunderstanding of probability like favorite follow and recognize the essence of fat tails like favorite follow. Only by understanding like favorite follow why we are always slapped in the face by small probability events like favorite follow. At Uncle Das Finance and Wisdom Diary can we find like favorite follow. At Uncle Das Finance and Wisdom Diary, the core rules for surviving in an uncertain world. Like favorite follow. We need to fully understand the concept of fat tails at Uncle Das Finance and Wisdom Diary like favorite follow thoroughly. Like favorite follow. Like favorite follow. To understand fat tails like favorite follow, let's start with the most familiar fat tail. Like favorite follow. In school like favorite follow, we learned a classic statistical concept like favorite follow. Normal distribution. Like favorite follow, which is drawn on paper like favorite follow. Like an upside down bell. Like favorite follow. This is the typical bell curve world. Like favorite follow. In this world like favorite follow, everything is very orderly. Like favorite follow. Extreme events not only rarely occur like favorite follow, but also have limited impact. Like favorite follow. For example, the height of people like favorite follow is a standard bell-shaped distribution. Like favorite follow. The height of most people around us like favorite follow is concentrated between 1.6 and 1.8 meters. This is the mean area. Like favorite follow. A little more extreme like favorite follow. People who are 1.5 or 1.9 meters tall are rare like favorite follow. They belong to the tail. Like favorite follow. But it's almost impossible to see a 5-meter tall person like favorite follow. Or an adult who is half a meter tall. Like favorite follow. This is the core feature of the bell curve. Like favorite follow. Extreme values are firmly locked by physical laws. Like favorite follow. When the sample size is large enough like favorite follow, the result will be infinitely close to the average. Like favorite follow. There will be no disruptive surprises. Like favorite follow. For example, if you toss a coin 1,000 times like favorite follow, the number of heads is probably around 500. Like favorite follow. It's almost impossible to get 999 heads. Like favorite follow. In the world of the bell curve like favorite follow, historical experience is reliable. Like favorite follow. We can use past data like favorite follow at Uncle Das Finance and Wisdom Diary to accurately predict the general range of the future. Like favorite follow at Uncle Das Finance and Wisdom Diary, but in the real world like favorite follow. Most fields are not normally distributed. At Uncle Das Finance and Wisdom Diary like favorite follow. Shi Fei Wei Fen Bu at Da Shu De Kai Ji Ri Ji but non-tail distributions. Dian Zan Shou Kang Guan Zhu. Suo Wei Fei Wei, the so-called non-tail Dian Zan Shou Kang Guan Zhu. Gu Ming Si Yi, as the name suggests, Dian Zan Shou Kang Guan Zhu. Zhu Shi Gai Lu Ku Xian De Liang Duan is the two ends of the probability curve. Dian Zan Shou Kang Guan Zhu. Bai Zheng Tai Fen Bu Zheng Hu Zheng Zhang are thicker and heavier than normal distribution. Dian Zan Shou Kang Guan Zhu. Ji Duan Shi Jian Fa Sheng De Gai Lu, the probability of extreme events Dian Zan Shou Kang Guan Zhu. Yuan Bai Wo Men Yang Chuan Tong Mo Xing Suan Chu Lai De Yao Gao is much higher than what we calculate with traditional models. Dian Zan Shou Kang Guan Zhu. Qi Yi Dan Fa Sheng, and once it happens Dian Zan Shou Kang Guan Zhu. Qi Ying Shang Li Wei Sheing Ji Shu Ji Bao Fa, their impact will explode exponentially. Dian Zan Shou Kang Guan Zhu. Ji Jia Gai Xie Zui Zhang Jie Guo, which directly changes the final result. Dian Zan Shou Kang Guan Zhu. Wei Larang Da Jia Ji Guan Li Jia, to make it easier for everyone to understand Dian Zan Shou Kang Guan Zhu. Wo Men Dui Bai Liang Yi Chong Jing. Let's compare two scenarios. Dian Zan Shou Kang Guan Zhu. Ru Guo Shi Bo Wei De Shen Gao Shi Jia. If it's Bawai's height world Dian Zan Shou Kang Guan Zhu. Ba De Chu Sheng Suo Yu Ren De Shen Gao Jia Chi Lai. If we add up the heights of all people on earth Dian Zan Shou Kang Guan Zhu. Ji Duan Shen Gao De Ren, the contribution of extreme height people Dian Zan Shou Kang Guan Zhu. Dui Zong Shen Gao De Gong Xian Wei Hu Chi Wei contribute very little to the total height. Dian Zan Shou Kang Guan Zhu. He Xin Gong Xian Jie Hai Shi Zhang Jian De Da Duo Shu Ren, the core contributors are still the majority in the middle. Dian Zan Shou Kang Guan Zhu. Dan Zai Fai Wei De Kai Fu Shi Jia Li, but in the world of fat Weiss wealth Dian Zan Shou Kang Guan Zhu. Qing Kuang Wan Quan Fan Zhuan, the situation is completely reversed. Dian Zan Shou Kang Guan Zhu. Quan Chu Zui Fu Yu De Ten Gi Ren, the top 10 richest people in the world Dian Zan Shou Kang Guan Zhu. Ta Men De Kai Fu Zong He, their wealth combined Dian Zan Shou Kang Guan Zhu. K Nen Chao Guo Hu Mian Ji Shi Yi Ren De Kai Fu Zong He may exceed the wealth of the next billion people. Dian Zan Shou Kang Guan Zhu. Zai Bai Ru Chong Xiao Shu Shi Chong. Another example is the best-selling book market. Dian Zan Shou Kang Guan Zhu. Jeju Shi Dian Xing De Fai Wei Ling Yu. This is a typical fat-tailed field. Dian Zan Shou Kang Guan Zhu. 1 Wan Ben Shu Li of 10,000 books Dian Zan Shou Kang Guan Zhu. 9.990 Ben K Nen Lien Sheng Ben Do Shou Bu Wei Lai. 9,990 books may not even cover cost Shou Kang Guan Zhu. Shu Yu Xian Mei De Da Duo Shu are the silent majority. Dian Zan Shou Kang Guan Zhu. Dan Li Sha 10 Ben Bao Quan Shu, but the remaining 10 best-selling books Dian Zan Shou Kang Guan Zhu. Nen Na Zhou Zheng Gi Shi Chong. 90% De Li Run can take 90% of the entire market's profits Dian Zan Shou Kang Guan Zhu. Ha Li Bo Te Shi Lai De Xiao Liang. The sales of Harry Potter series Dian Zan Shou Kang Guan Zhu. Yuan Xiao Tong Chi Yu Shi Wan Ben Xiao Shuo De Xiao Liang Zong He exceeded the sales of hundreds of thousands of novels. Dian Zan Shou Kang Guan Zhu. Jeju Shi Fei Yi De Li Liang. This is the power of fat tails. Dian Zan Shou Kang Guan Zhu. At Da Shu De Kai Ji Ri Ji Ji Xiao Shu Wei Ding Wei Da Duo Shu, the few determine the majority. Dian Zan Shou Kang Guan Zhu. At Da Shu De Kai Ji Ri Ji Tu Zi Shi Chong Zheng Shi Fai Wei Xiao Ying De Zhang Zai Ku. The investment market is the hardest hit by fat tails. Dian Zan Shou Kang Guan Zhu. Hen Duo Ren Kan Ji Jin Zan Chuan Si Shi at Da Shu De Kai Ji Ri Ji. When many people look at the fund brochure Dian Zan Shou Kang Guan Zhu. Wei Bei Nian Hua Shou Yi Lu 10% Shi Yin are attracted by the annualized rate of 10% Dian Zan Shou Kang Guan Zhu. Wei Dei Jie Shi Ping Wen De Jun Ji thinking it's a stable mean. Dian Zan Shou Kang Guan Zhu. Dan Zhen Shi De Gu Shi Shou Yi, but the real stock market returns Dian Zan Shou Kang Guan Zhu. 2300 Kong Lai Bu Shi Mei Nian Wen Ding Zhang 10% never rises steadily by 10% every year Dian Zan Shou Kang Guan Zhu. 200 Air Shi Da Bu Fen Shi Jian Zai Zhen Dang Shen Ji Sha Dai, but mostly fluctuates or even falls. Dian Zan Shou Kang Guan Zhu. 2300 Gu Ji Xiao Shu Jiao Yi Ri Da Bao Zhang. Only a few trading days surge Dian Zan Shou Kang Guan Zhu. 2300 Wei Ding Le Zhang Qi Da Shou Yi determine the long-term returns. Dian Zan Shou Kang Guan Zhu. 2300 Wo Men Qian Mian Shuo Guo De Li Zi. The example we mentioned earlier, Dian Zan Shou Kang Guan Zhu. Mei Guo Gu Shi Guo Ku 112 Nian De Li Shi Shu Ju. The historical data of the U.S. stock market over the past. Dian Zan Shou Kang Guan Zhu. Zhu Shi Zui Yu Li De Zheng Ming is the most powerful proof. Dian Zan Shou Kang Guan Zhu. Ru Guo Ni Kuo Guo Le J 112 Nian Li. If you miss the top 10 trading days in the past, Dian Zan Shou Kang Guan Zhu. Zhang Fu Zui Gao De 10 Gi Zhao Yi Ri. The 10 trading days with the highest gains. Dian Zan Shou Kang Guan Zhu. Ni De Zong Shou Yi Wei Ji Jia Jian Shao. 2/3 your total return will be directly reduced by 2/3. Dian Zan Shou Kang Guan Zhu. Huanju Hua Shuo. In other words, Dian Zan Shou Kang Guan Zhu. You've stayed in the market for 112 years, but it might not be as good as seizing these 10 days. Like, favorite, follow. May not be as good as catching these 10 days. Like, favorite, follow. This is the essence of fat tails. Like, favorite, follow. Daily small fluctuations are insignificant. Like, favorite, follow. But extreme fluctuations are the watershed of fate. Like, favorite, follow. The core feature of fat-tailed events is low probability. Like, favorite, follow. Its occurrence frequency is far lower than daily events like favorite, follow. But the single impact like favorite, follow is enough to offset the cumulative impact of all daily events like favorite, follow, such as earthquakes. Like favorite, follow. For a city, like favorite, follow. A once-in-a-century earthquake is a fat-tailed event. Like favorite, follow. It doesn't happen every year. Like favorite, follow. But once it happens, like favorite, follow, the damage it causes, like favorite, follow, may exceed all the small disasters in the past. Like favorite, follow. All small disasters combined. Like favorite, follow. Another example is entrepreneurship. Like favorite, follow. Capital turnover that most entrepreneurs will encounter. Like favorite, follow. And employee turnover. Like favorite, follow. Are daily fluctuations. Like favorite, follow. But sudden industry policy adjustments. Like favorite, follow. Giants entering the field. Like favorite, follow. Are fat-tailed events. Like favorite, follow. May cause a formerly profitable company to collapse instantly. Like favorite, follow. Or make a startup company rise overnight. Like favorite, follow. The reason why we always make mistakes in the fat-tailed world. Like favorite, follow, is that we use fat-tailed thinking to deal with fat-tailed problems. Like favorite, follow. We are used to predicting the future from the past. Like favorite, follow. We think extreme events that haven't happened in the past. Like favorite, follow, will not happen in the future. Like favorite, follow. We think the average returns in the past will continue. Like favorite, follow. But in fat-tailed distributions. Like favorite, follow, historical data is extremely limited. Like favorite, follow. Because the intervals of extreme events. Like favorite, follow, may be far longer than our observation period. Like favorite, follow. Just like a frog living in a pond. Like favorite, follow. He observed for 100 days. Like favorite, follow. And found that the water level was stable at 1 meter. Like favorite, follow. So he concluded that, like favorite, follow, the water level would never exceed 1 meter. Like favorite, follow. But on the 101st day. Like favorite, follow, a heavy rain caused a flood. Like favorite, follow. The water level rose to 5 meters. Like favorite, follow. The frog's historical experience was instantly invalid. Like favorite, follow. More importantly, like favorite, follow, the extremes in the fat-tailed world have no upper limit. Like favorite, follow. In Bawai's height world. Like favorite, follow, we can calculate the theoretical maximum height. Like favorite, follow. But in Fei Weiss financial markets. Like favorite, follow, we can never calculate the limit of the maximum decline. Like favorite, follow. In 2020 global stock markets. Like favorite, follow, circuit breakers. Many thought this was the ultimate extreme. Like favorite, follow. But from Fei Weiss perspective. Like favorite, follow, it's just a regular tail in the probability curve. Like favorite, follow, more extreme fluctuations may occur in the future. Like favorite, follow. At this point. Like favorite, follow, you should already understand that. Like favorite, follow, the world we live in. Like favorite, follow, is not a gentle world dominated by the mean. Like favorite, follow, at Uncle Das Financial Wisdom Diary, but a wild world dominated by extremes. Like favorite, follow, at Uncle Das Financial Wisdom Diary. But the problem is. Like favorite, follow, at Uncle Das Financial Wisdom Diary, when we use logic and tools based on the Fei Wei world. Like favorite, follow, to deal with the challenges of the world of Fei Wei at Uncle Das Financial Wisdom Diary. Like favorite, follow, what will happen? Like favorite, follow, the answer is that all conventional logic will fail. Like favorite, follow, our proud professional models and accurate predictions. Like favorite, follow, will become self-comforting bubbles. Like favorite, follow, next part. Like favorite, follow, we will dissect how under the impact of fat tails. Like favorite, follow, the investment common sense that we firmly believe in. Like favorite, follow, decision-making logic. Like favorite, follow, are failing step by step. Like favorite, follow, like favorite follow, and well, like favorite follow, like favorite follow. Before we enter this section like favorite follow, we have reached a consensus that the real world like favorite follow, especially in the financial and business fields like favorite follow, is dominated by fat tails, like favorite follow. But the cruel reality is that like favorite follow, what we learned in school like favorite follow, and in our work like favorite follow, almost all classic decision-making tools and logics like favorite follow, are all based on the normal distribution of Boole, like favorite follow. It's like using a precise ruler like favorite follow to measure the rough sea, like favorite follow. The result is doomed to be absurd, like favorite follow. When the fat-tailed effect appears like favorite follow, the conventional logic we regard as the norm like favorite follow will collectively fail, like favorite follow. This failure is not a subtle deviation like favorite follow, but the collapse of the underlying logic, like favorite follow. Next we will deconstruct this cognitive disruption like favorite follow. Experts hedging to analyze this cognitive subversion, like favorite follow. Experts hedging the failure of the law of the tree like favorite follow. Experts hedging makes experience unreliable and the failure of traditional risk indicators, like favorite follow. Experts purple fist at Daquan's hedging diary makes assessment a joke and the failure of prediction, like favorite follow. Experts hedging and the failure of diversification makes experts helpless at Daji's financial wisdom diary like favorite follow. Experts hedging turns hedging strategies into bubbles, like favorite follow. The first is the failure of the law of the big tree, like collect follow. Historical experience is no longer a guide to the future, like collect follow. A guide to the future, like collect follow. In the fat-tailed world like collect follow, the law of the big tree is a golden rule, like collect follow. For example, if you want to know if a coin is fair like collect follow, throwing it 30 times like collect follow, the proportion of heads up will be close to 50%, like collect follow. Throwing 100 times will be more accurate, like collect follow. This means that like collect follow, a small number of samples can get us close to the truth, like collect follow. Past experience can perfectly predict the future, like collect follow. But in the fat-tailed world, like collect follow, this logic completely collapses, like collect follow. The extreme values of fat-tailed distributions are inconvenient, like collect follow. Simply put, the number of samples you need to collect like collect follow far exceeds the observation period of humans, like collect follow. In a normal distribution like collect follow, 30 samples are enough to outline the curve, like collect follow. But in some extreme fat-tailed distributions like collect follow, you may need to collect 10 to the power of 11 samples like collect follow to stabilize the mean, like collect follow. This order of magnitude like collect follow is more than all the historical data since the birth of human civilization, like collect follow. More than all historical data, like collect follow. This brings a fatal consequence, like collect follow. The historical mean we rely on like collect follow is just a temporary and accidental value, like collect follow. For example, like collect follow, suppose we invest in a fat-tailed market, like collect follow. The return rate is stable at 1% per day for the first 1,000 days, like collect follow. It's easy for us to conclude that like collect follow, it is a low risk and stable profit, like collect follow. But on the 1,001st day like collect follow, there may be an extreme event of a 1,000% loss like collect follow, which instantly wipes out all previous gains, like collect follow. In the black swan world like collect follow, such an extreme day 1001 is almost impossible, like collect follow. But in the fat-tailed world like collect follow, it not only exists like collect follow, but is also the key to the final result, like collect follow. Just like the long-term capital management's tragedy like collect follow, they use the market data of the past 50 years like collect follow to build models like collect follow, and thought their strategy was flawless, like collect follow. But 50 years like collect follow, in Feiwei's timescale like collect follow, is just a blink of an eye like collect follow, which is not enough to cover those once in a century like collect follow, or even once in a millennium extreme events, like collect follow. When Russia defaulted on its debt Dian Zhanshou Kangguanzhu, which was beyond their sample Dian Zhanshou Kangguanzhu, fat-tailed event occurred Dian Zhanshou Kangguanzhu, their historical experience was instantly zeroed. Dian Zhanshou Kangguanzhu, this is the subversion of the fat tail to the law of trees. Dian Zhanshou Kangguanzhu, before extreme events occur Dian Zhanshou Kangguanzhu, all experience is one-sided. Dian Zhanshou Kangguanzhu, we can never infer that the future will not happen Dian Zhanshou Kangguanzhu, to infer that it will not happen in the future. Dian Zhanshou Kangguanzhu, the second subversion is more terrifying than experience failure. Dian Zhanshou Kangguanzhu, standard deviation Dian Zhanshou Kangguanzhu, sharp ratio as representative traditional risk indicators Dian Zhanshou Kangguanzhu, have all become pseudo-indicators. Dian Zhanshou Kangguanzhu, When making investment decisions, Dian Zhan Shou Kang Guan Zhu, we always like to look at some professional data. Dian Zhan Shou Kang Guan Zhu, such as the standard deviation of this fund Dian Zhan Shou Kang Guan Zhu, and the Sharpe ratio. Dian Zhan Shou Kang Guan Zhu, standard deviation measures the volatility of returns. Dian Zhan Shou Kang Guan Zhu, Sharpe ratio Dian Zhan Shou Kang Guan Zhu, measures the return per unit of risk. Dian Zhan Shou Kang Guan Zhu. These indicators are regarded as the gold standard for risk assessment Shou Kang Guan Zhu. But few people realize that Dian Zhan Shou Kang Guan Zhu, the mathematical basis of these indicators is normal distribution. Dian Zhan Shou Kang Guan Zhu. In a normal distribution Dian Zhan Shou Kang Guan Zhu, there are very few extreme values. Dian Zhan Shou Kang Guan Zhu, and fluctuations mainly concentrate around the mean. Dian Zhan Shou Kang Guan Zhu, so using standard deviation to measure risk is effective. Dian Zhan Shou Kang Guan Zhu, but in fat-tailed distributions Dian Zhan Shou Kang Guan Zhu, the core of risk Dian Zhan Shou Kang Guan Zhu, comes from the extreme values ignored by standard deviation. Dian Zhan Shou Kang Guan Zhu, the standard deviation formula has a square step Dian Zhan Shou Kang Guan Zhu, which amplifies moderate fluctuations Dian Zhan Shou Kang Guan Zhu, but it is powerless to deal with the real extreme fluctuations. Dian Zhan Shou Kang Guan Zhu, because when the volatility is beyond the model's expectation Dian Zhan Shou Kang Guan Zhu, the standard deviation has long lost its reference value. Dian Zhan Shou Kang Guan Zhu, for an intuitive example Dian Zhan Shou Kang Guan Zhu, suppose there are two funds. Dian Zhan Shou Kang Guan Zhu, fund as annual return is 10% Dian Zhan Shou Kang Guan Zhu, with zero volatility. Dian Zhan Shou Kang Guan Zhu, fund B earns 15% every year for the first 9 years Dian Zhan Shou Kang Guan Zhu, and lost 90% in the 10th year. Dian Zhan Shou Kang Guan Zhu, from the standard deviation fund A Dian Zhan Shou Kang Guan Zhu, fund A has lower risk. Fund B Dian Zhan Shou Kang Guan Zhu, but from the perspective of Fat Tail's Fund B Dian Zhan Shou Kang Guan Zhu, the risk of Fund B is devastating. Fund B Dian Zhan Shou Kang Guan Zhu, if we use the Sharpe ratio to calculate Fund B Dian Zhan Shou Kang Guan Zhu, the Sharpe ratio in the first 9 years is very beautiful Dian Zhan Shou Kang Guan Zhu, enough to fool most investors. Like favorite follow, but the 10th year's fat tail but the fat-tailed event in the 10th year like favorite follow. Event will make all decisions based on the Sharpe ratio event will make all decisions based on the Sharpe ratio like favorite follow. Become a joke, like favorite follow. What's more ironic is that like favorite follow. Many financial institutions will optimize these indicators many financial institutions will optimize these indicators like favorite follow. Deliberately hide fat-tailed risks. Like favorite follow. They will control the portfolio's volatility like favorite follow. Within a small range like favorite follow. To keep the standard deviation low. Like favorite follow. But secretly bear huge extreme risks. Like favorite follow. Just like in the subprime mortgage crisis in 2008. Like favorite follow. Those bonds rated AAA like favorite follow. Measured by traditional indicators the risk is very low the risk is very low like favorite follow. But in fact once they default like favorite follow. The fat-tailed risk of losing everything like favorite follow. It tells us that like favorite follow. In a fat-tailed world like favorite follow. Low volatility does not equal low risk. Like favorite follow. Those seemingly perfect risk indicators like favorite follow are just self-deceiving digital games. Like favorite follow. The third disruption like favorite follow hits the core of our decision making and predictions fail. Like favorite follow. All accurate predictions based on models like favorite follow are like looking for a sword in a boat. Like favorite follow. Humans are naturally prone to prediction. Like favorite follow. We like to ask if the stock market will rise tomorrow. Tomorrow like favorite follow. Will the economy recover next year? Like favorite follow. We are willing to pay for experts' accurate predictions. Like favorite follow. But in a fat-tailed world like favorite follow. Predictions are not only useless like favorite follow, but also bring fatal misguidance. Like favorite follow. Because the essence of fat-tailed events like favorite follow are events beyond our cognitive framework. Are events beyond our cognitive framework. Like favorite follow. They are not in our historical data. They are not in our historical data like favorite follow. Nor in our model parameters. Nor in our model parameters like favorite follow. Nor in the experience of experts. Nor in the experience of experts. Like favorite follow. Long-term capital management like favorite follow is the best case of failed predictions. Is the best case of failed predictions. Like favorite follow. The core team of this company. The core team of this company like favorite follow. Led by 2 Nobel Prize winners in economics. Led by 2 Nobel Prize winners in economics like favorite follow. And gathered the top quantitative experts on Wall Street. And gathered the top quantitative experts on Wall Street. Like favorite follow. They used complex mathematical models. They used complex mathematical models like favorite follow to accurately predict the tiny fluctuations in the market. To accurately predict the tiny fluctuations in the market. Like favorite follow. And amplified their returns through leverage. And amplified their returns through leverage. Like favorite follow. In the model like favorite follow. They calculated the probability of extreme losses. They calculated the probability of extreme losses. Like favorite follow. Was 10 sigma events like favorite follow. Which means in the lifetime of the universe. Which means in the lifetime of the universe like favorite follow. Which could never happen in the lifetime of the universe. Which could never happen in the lifetime of the universe. Like favorite follow. But reality dealt them the heaviest blow. Like favorite follow. In 1998 Russia declared a debt default. Like favorite follow. This fat-tailed event completely exceeded the model's expectations. Like favorite follow. Causing the correlation of global financial markets to soar. Like favorite follow. The assets that were supposed to hedge risks like favorite follow all fell simultaneously. Like favorite follow. LTCM's model completely collapsed. Like favorite follow. In just a few months like favorite follow. This giant managing tens of billions of assets like favorite follow was on the verge of bankruptcy. Like favorite follow. It was finally saved by the Federal Reserve's emergency aid. Like favorite follow. This case proves a cruel fact. Like favorite follow. Fat-tailed events are unpredictable. Like favorite follow. At Uncle Das Finance and Wisdom Diary. Any probability that can be calculated by a model like favorite follow. At Uncle Das Finance and Wisdom Diary. Thin-tailed regular events of fat-tailed events. Like favorite follow. At Uncle Das Finance and Wisdom Diary are regular events of thin tails. Like favorite follow. Just like we can't predict like favorite follow when the next earthquake will occur like favorite follow. Or when like favorite follow the next industry disrupting technology will emerge. Like favorite follow. Because these events have no patterns to follow like favorite follow. And no samples to rely on. Like favorite follow. Experts' predictions like favorite follow are merely inertial judgments based on regular fluctuations of the past like favorite follow. Making an inertial judgment, like favorite follow, they are vulnerable in the face of sudden fat-tailed events. Like favorite follow. The fourth disruption like favorite follow concerns our final safety net. Like favorite follow. Don't put all your eggs in one basket. Like favorite follow. The diversification strategy like favorite follow became a diversification trap under fat tails. Like favorite follow. Like favorite follow. Harry Markovitz's modern portfolio theory like favorite follow is the theoretical basis of the diversification strategy. Like favorite follow. This theory tells us that like favorite follow, by allocating assets with low correlations like favorite follow, we can reduce overall risk without lowering returns. Like favorite follow. Reduce overall risk. Like favorite follow. In the black swan world like favorite follow. This strategy is indeed effective. Like favorite follow. When stocks fall bonds may rise like favorite follow. Offsetting risks. Like favorite follow. But in the fat-tailed world like favorite follow, this safety threshold will be instantly breached. Like favorite follow. Because when fat-tailed events occur like favorite follow, the correlation of all assets will suddenly surge to 1. Like favorite follow. That is no matter how many assets you allocate like favorite follow. They will all fall simultaneously. Like favorite follow. This is the so-called diversification trap. Like favorite follow. Usually seemingly effective risk hedging like favorite follow is useless in extreme moments. Like favorite follow. When the COVID-19 pandemic broke out in 2020 like favorite follow, it was a typical correlation explosion event. Like favorite follow. At Uncle Das Financial Wisdom Diary at that time global stock markets commodities credit bonds. Like collect follow. And even gold which was originally considered a safe haven asset at Uncle Das Financial Wisdom Diary. Like collect follow. All fell sharply in a short time. At Uncle Das Financial Wisdom Diary like collect follow. Investors originally thought that when stocks fell like collect follow, gold would rise. Like collect follow. But found that all assets were being sold off. Like collect follow. The diversification strategy failed completely. Like collect follow. Another example is the financial crisis in 2008. Like collect follow. The US stock market, European stock market and emerging markets. Like collect follow. Almost simultaneously crashed. Like collect follow. The so-called global diversification like collect follow turned into a global synchronized loss. Like collect follow. Why does this happen? Like collect follow. Because in the extreme moments of fat markets like collect follow, the market's core logic like collect follow changes from asset differences to liquidity panic. Like collect follow. When investors face huge loss pressure like collect follow, they will sell all assets for cash. Like collect follow. Regardless of how low the correlation is usually. Like collect follow. Modern finance assumes that like collect follow, the distribution of assets is elliptical like collect follow, and correlations are stable, like collect follow. But the real market is not elliptical. Like collect follow. Correlations can suddenly change at extreme moments. Like collect follow. In a fat-tailed world like collect follow, we cannot buy more stocks like collect follow, or allocate more in several industries like collect follow, to truly avoid extreme risks. Like collect follow. At this point like collect follow, we have seen the full disruption brought by fat tails. Like collect follow. The law of large numbers makes experience useless. Like collect follow. Traditional indicators make risk assessment ineffective. Like collect follow. And predictions make expert decisions ineffective. Like collect follow. Diversification makes hedging strategies ineffective. Like collect follow. The conventional logic we rely on for survival like collect follow, in the fat-tailed world like collect follow, have become traps leading to disaster. Like collect follow. At this time many people will fall into despair. Like collect follow. Since all conventional logic has failed like collect follow, can we just sit still and wait for death? Like collect follow. The answer is of course no. Like collect follow. Taleb wrote The Fat Tail Effect like collect follow, not to tell us the world is dangerous at Uncle Das Financial Wisdom Diary like collect follow, but to teach us at Uncle Das Financial Wisdom Diary like collect follow how to survive in a dangerous world. At Uncle Das Financial Wisdom Diary like collect follow, his core point is that since we cannot predict at Uncle Das Financial Wisdom Diary like collect follow extreme events like collect follow, and extreme risks with conventional logic like collect follow, so we should give up accurate prediction like favorite follow, and instead pursue anti-fragility like favorite follow, abandon the black swan thinking like favorite follow, and instead establish the fat-tailed survival rules like favorite follow. The next part, like favorite follow, we will enter like favorite follow, the most practical part of this book. Like favorite follow, Taleb's anti-fragility response strategies. Like favorite follow, we will start from the underlying logic of risk sharing like favorite follow, and dissect the practical method of the barbell strategy like favorite follow, and learn how to focus on vulnerability rather than prediction like favorite follow. Build a survival system suitable for the fat-tailed world like favorite follow, so that we can not only survive in the face of extreme events like favorite follow, share risks but also gain benefits against the trend like favorite follow. Like favorite follow, in a world dominated by fat tails like favorite follow, the collapse of conventional logic makes us realize that like favorite follow, trying to predict extreme events like favorite follow, optimizing strategies based on historical data like favorite follow, and pursuing steady returns with moderate risks like favorite follow, are all shortcuts to disaster. Like favorite follow, in Taleb's black swan effect, like favorite follow, offers the core solution. Like favorite follow, is not to avoid risks or predict accurately like favorite follow, but to build an anti-fragile system like favorite follow. In uncertainty we can not only survive like favorite follow, but also benefit from extreme events like favorite follow. This set of survival rules like favorite follow is based on the underlying logic of risk sharing like favorite follow, by using the barbell strategy to allocate resources like favorite follow. At Uncle Das Finance and Wisdom Diary focus on vulnerability rather than prediction like favorite follow. At Uncle Das Finance and Wisdom Diary avoid the pitfalls of pseudo-empiricism like favorite follow, constitutes a complete action framework for the fat-tailed world. At Uncle Das Finance and Wisdom Diary like favorite follow, Rule 1 risk sharing like favorite follow, let decision makers taste their own cooking like favorite follow. Risk sharing is the cornerstone of Taleb's strategies like favorite follow. Its core logic is that like favorite follow, without risk sharing advice is empty talk like favorite follow. A system without risk sharing is necessarily fragile like favorite follow. In the fat-tailed world like favorite follow, any decision that is not exposed to risk like favorite follow may be broken by extreme events like favorite follow, only by letting decision makers personally like favorite follow bear the potential losses of decisions like favorite follow, can filter out short-sightedness like favorite follow, greed and irresponsible behavior like favorite follow, to form a sustainable survival mechanism like favorite follow. Taleb clearly pointed out in the book like favorite follow, risk sharing is a natural filtering mechanism like favorite follow, just like asking a chef to taste their own dishes like collect follow, must taste their own dishes. Like collect follow. To ensure the freshness of ingredients and moderate seasoning. Like collect follow. Avoid perfunctory work. Like collect follow. This mechanism is everywhere in reality. Like collect follow. The work of a plumber. Like collect follow. Is directly related to whether the pipes leak. Like collect follow. Once there's a problem, it affects their reputation and future business. Like collect follow. The success rate of a surgeon's surgery. Like collect follow. Is directly related to their professional reputation. Like collect follow. And may even face the risk of medical disputes. Like collect follow. The work of engineers. Like collect follow. Must withstand the erosion of wind and rain and the test of time. Like collect follow. Poor quality projects will make them bear legal liability. Like collect follow. Professionals in these fields. Like collect follow. Are all constrained by the sharing of risks. Like collect follow. Maintain professionalism and caution. Like collect follow. Because their interests are deeply tied to the outcome. Like collect follow. The secret to Goldman Sachs' 149 years of standing strong. Like collect follow. The unlimited liability partnership system for 130 years. Like collect follow. Under this system, like collect follow, the partner's personal assets, like collect follow, are completely tied to the company's operations. Like collect follow. Any mistake in investment decisions. Like collect follow. May lead to their ruin. Like collect follow. This deep risk sharing. Like collect follow. This deep risk sharing. Like collect follow. Forces Goldman Sachs in every market fluctuation. Like collect follow. To maintain extreme caution. Like collect follow. Avoiding the blind pursuit of short-term gains. Like collect follow. And ignoring fat-tailed risks. Like collect follow. In stark contrast to this. Like collect follow. Is the tragedy of long-term capital management. Like collect follow. A team composed of Nobel laureates. Like collect follow. Designed complex arbitrage models. Like collect follow. But they didn't have to bear personal losses for model failure. Like collect follow. They were paid high salaries. Like collect follow. But let investors bear all the risks. Like collect follow. When Russia defaulted on its debt. Like collect follow. When this fat-tailed event occurred. Like collect follow. The company went bankrupt instantly. Like collect follow. But the core team members. Like collect follow. Did not pay an equal personal price. Like collect follow. This asymmetric structure of profits to themselves and risks to others. Like collect follow. Is doomed to be vulnerable. Like collect follow. In real life. Like collect follow. The application scenarios of risk sharing. Like collect follow. Are far more extensive than we imagine. Like collect follow. In personal finance. Like collect follow. If a financial advisor recommends high-risk products. Like collect follow. But does not disclose whether he holds the stock. Like collect follow. This advice deserves our vigilance. Like collect follow. In enterprise management. Like collect follow. If management's compensation is always tied to short-term performance. Like collect follow. But not the company's long-term survival risks. Like collect follow. It may lead to gambler-like decisions. Like collect follow. To boost the stock price. Like collect follow. And ignore potential industry policy changes. Like collect follow. Technological disruptions and other tail risks. Like collect follow. Even in policy making. Like collect follow. If policymakers. Like collect follow. Do not have to bear the consequences of policy mistakes. Like collect follow. They may introduce unrealistic and radical policies. Like collect follow. Which may lead to systemic risks. Like collect follow. Taleb emphasizes that like collect follow. The core of risk sharing is not to make money together. Like collect follow. But to share losses. Like collect follow. Only when the decision maker's losses. Like collect follow. Are directly linked to the consequences of decisions. Like collect follow. Will they truly take risks seriously. Like collect follow. And give up the fluke mentality of gambling. Like collect follow. Choosing more stable and anti-fragile strategies. Like collect follow. The law provides us with the ultimate criteria to judge. Like collect follow. Whether any proposal or system is reliable. Like collect follow. At Uncle Das Financial Wisdom Diary, see if the proposer takes the corresponding risks. Like collect follow. Rule 2. The barbell strategy doesn't put all its eggs in one basket. At Uncle Das Financial Wisdom Diary. Like collect follow. Facing the extreme uncertainty of the world. Like collect follow. Taleb proposed the most practical allocation strategy. Like collect follow. The barbell strategy. Like collect follow. Its core logic is like collect follow. To give up the false security of medium risk and medium return. Like collect follow. And allocate resources to two extremes. Like collect follow. One extreme is conservative to ensure survival. Like collect follow. And the other extreme is aggressive to capture excess returns. Like collect follow. Through this asymmetric allocation. Like collect follow. It avoids the fatal blow of black swans. Like collect follow. But also benefits from extreme market conditions. Like collect follow. The structure of the barbell strategy seems simple. Like collect follow. But it actually implies a deep understanding of fat tails. Like collect follow. Specifically like collect follow. It usually takes the form of an 80-20 allocation. like collect follow. 80% of resources are invested in extreme conservatism like collect follow, such as depositing in banks or buying short-term treasury bonds like collect follow, and high-quality bonds like collect follow. These assets are highly liquid and have very low risks like collect follow. Even in the event of a financial crisis epidemic like collect follow, or other extreme events, it can ensure the safety of principal like collect follow, providing us with a survival bottom line like collect follow. 20% of resources are invested in extreme radical areas like collect follow, such as a small amount of high-risk, high-return stock options like collect follow, startup investments and so on. At Uncle Das Financial Wisdom Diary like collect follow, these assets may fluctuate greatly under normal circumstances. At Uncle Das Financial Wisdom Diary like collect follow, or even face losses like collect follow. But once encountering fat-tailed markets like collect follow, such as industry explosions and technological breakthroughs like collect follow, they can bring dozens or even hundreds of times returns like collect follow, and become the core source of returns like collect follow. While medium-risk assets like collect follow, such as stock portfolios heavily invested in a single industry at Uncle Das Financial Wisdom Diary like collect follow, average return wealth management products like collect follow are completely abandoned like collect follow, because they have limited returns in stable periods like collect follow, and cannot withstand risks in extreme periods like collect follow. They belong to the vulnerability trap like collect follow. Why does this seemingly extreme allocation like collect follow adapt to fat-tailed events like collect follow? The key lies in the extreme dominance of fat-tailed distribution like collect follow. Daily small fluctuations have little impact on the final result like collect follow. What really determines the return is a few extreme markets like collect follow. The conservative part of the barbell strategy like collect follow is essentially giving up small fluctuations in returns like collect follow in exchange for the right not to go bankrupt like collect follow. It ensures that in 99% of stable periods like collect follow, we won't be out of the game due to market fluctuations like collect follow. The aggressive part like collect follow is to use small costs like collect follow to obtain excess returns in extreme market conditions like collect follow. It allows us in 1% of extreme moments like collect follow to seize the opportunity like collect follow and achieve a leap in wealth growth like collect follow. In personal investment like collect follow, the application of the barbell strategy is very intuitive like collect follow. According to the barbell strategy like collect follow, 800,000 yuan can be deposited in a bank or used to buy government bonds like collect follow, with an annualized return of 3 to 4% like collect follow. Although not high like collect follow, the principal is absolutely safe like collect follow. The aggressive funds up to 200,000 yuan can be used to bet big with small amounts like collect follow. Aggressive funds can be allocated to a small number of leading stocks in high growth sectors, betting big with small amounts like collect follow. Aggressive funds or index options betting big with small amounts like collect follow. Stocks may double in value during industry booms betting big with small amounts like collect follow. At Uncle Das Financial Wisdom Diary, options can multiply small amounts of money betting big with small amounts like collect follow. Aggressive funds obtain excess returns during significant market fluctuations betting big with small amounts like collect follow. Under this configuration at Uncle Das Financial Diary like save follow, your maximum loss is capped at 200,000 yuan in funds like save follow. Some may lose 50% like save follow, but the potential upside is limitless like save follow. It perfectly matches the limited losses of a fat-tailed world like save follow and the anti-fragile nature of unlimited gains like save follow. In business operations like save follow, the barbell strategy is equally effective like save follow. For instance, a manufacturing company like save follow dedicates 80% of its capacity to producing mature products like save follow, ensuring stable cash flow and market share like save follow. 20% of its resources like save follow are invested in cutting-edge R&D or emerging markets like save follow, to develop new products like save follow, and weather industry cycles like save follow. The R&D and new markets like save follow could become new growth engines when there are breakthroughs like save follow, or market shifts like save follow. In contrast, like save follow, companies that pour all their resources into a single product like save follow, or a single market like save follow, may seem stable like save follow, but are actually fragile like save follow. Once hit by policy changes like save follow, technological disruption or other unforeseen events like save follow, they could face ruin like save follow. Even in career choices like save follow, the barbell strategy can be applied like save follow. For example, you can have a stable main job like save follow, securing your basic income and livelihood like save follow, Then use your spare time to develop a side hustle or pursue a passion like save follow. Like writing, entrepreneurship, or investing. Like save follow. Your main job shields you from unemployment risks like save follow, while the side hustle might eventually become your main gig like save follow, or bring unexpected substantial returns. Like save follow. This model with a secure main job and an ambitious side hustle like save follow is far more anti-fragile than betting everything on one popular career. Like save follow. It's more anti-fragile. Like save follow. Taleb emphasizes that like save follow, the key to the barbell strategy like save follow isn't how much the aggressive part earns like save follow, but how much the conservative part ensures you don't go bankrupt. Like save follow. Only by surviving like save follow can you seize the opportunities presented by extreme market events. Like save follow. Meanwhile, those intermediate strategies pursuing stable returns like save follow, seemingly safe like save follow, are actually vulnerable when fat-tailed events strike. Like save follow. At Uncle Doss Financial Diary. Like offline retailers during the 2020 pandemic. Like save follow. At Uncle Doss Financial Diary. They lacked the cash flow reserves of the conservative side like save follow, and the online channel presence of the aggressive end. At Uncle Doss Financial Diary. Like save follow. Ultimately going bankrupt in extreme events. Like collect follow. Rule 3. Give up. Like collect follow. Precise prediction. Like collect follow. Focus on vulnerability. Like collect follow. In a fat-tailed world like collect follow, it is impossible to predict extreme events. Like collect follow. The essence of a black swan event like collect follow is an event that exceeds the cognitive framework and historical data. Like collect follow. Taleb's core insight is that like collect follow, we don't need to know what will happen in the future like collect follow. We only need to know what will make us bankrupt like collect follow, and then avoid this situation. Like collect follow. Instead of wasting energy predicting unpredictable futures like collect follow, it's better to focus on identifying and avoiding vulnerability. Like collect follow. Build immunity to extreme events. Like collect follow. The core definition of vulnerability is sensitivity to extreme events like collect follow, and losses will be exponentially amplified with event intensity. Like collect follow. For example, a glass cup like collect follow, dropped from 1 meter might be intact like collect follow, but it will be shattered if dropped from 10 meters. Like collect follow. Losses increase exponentially with height. Like collect follow. This is typical vulnerability. Like collect follow. But a rubber ball like collect follow, the higher it falls from like collect follow, the greater the rebound force. Like collect follow. The benefit increases with the increase of event intensity. Like collect follow. This is anti-fragility. Like collect follow. But a stone like collect follow, no matter how high it falls from like collect follow, will basically remain unchanged. Like collect follow. In a fat-tailed world like collect follow, our goal is not to be stones like collect follow, but a rubber ball. Like collect follow. At least avoid being a glass cup. Like collect follow. The key to identifying vulnerability like collect follow is to see if a system, a decision, or an asset portfolio like collect follow has unacceptable losses. Like collect follow. For example, like collect follow, an over-leveraged portfolio is vulnerable. Like collect follow. A small market decline may lead to insufficient margin like collect follow. Forced liquidation. Like collect follow. While a sharp decline in the market can lead to bankruptcy. Like collect follow. The losses caused by this decline like collect follow exceed the gains from rising. Like collect follow. This asymmetric structure like collect follow is a typical feature of vulnerability. Like collect follow. Another example is like collect follow. A business that relies on a single customer is fragile. Like collect follow. If the customer is lost like collect follow, the enterprise may face the risk of cash flow interruption. Like collect follow. Individuals who rely on a single source of income like collect follow are also vulnerable. Like collect follow. Once unemployed or in a recession like collect follow, recession could lead to financial crisis or industry recession, they may face financial crisis. Like favorite follow. To cope with vulnerability, like favorite follow, the core is to use extreme value theory instead of empirical distribution. Favorite follow. The core of extreme value theory, like favorite follow, is not to rely on the highest water level in historical data like favorite follow, but instead relies on the tail characteristics of the distribution, like favorite follow, to estimate future extreme values. Like favorite follow. For example, like favorite follow, traditional flood control engineering only refers to the highest historical water level. Like favorite follow. But extreme theory considers the fat-tailed distribution. Like favorite follow. The possibility of exceeding the historical highest water level like favorite follow. And design higher dams like favorite follow. For example, when a company makes a cash flow plan like favorite follow, it can not only refer to the largest loss in history, like favorite follow, but also the cash flow gap in extreme situations. Like favorite follow. Reserve sufficient cash reserves. Like favorite follow. Goldman Sachs survived the financial crisis in 2008, like favorite follow, is precisely because, like favorite follow, it reserved cash reserves far exceeding historical needs like favorite follow, which mitigated the extreme risk of liquidity shortage. Like favorite follow, another effective way to deal with vulnerability, like favorite follow, is to conduct stress tests. Like favorite follow, to simulate the impact of extreme events on the system. Like favorite follow, and identify potential risks in advance. Like favorite follow, for example, banks will simulate large interest rate fluctuations like favorite follow, and a large number of depositors withdrawing money. Like favorite follow, at Uncle Das Finance and Wisdom Diary to test their capital adequacy ratio. Like favorite follow, at Uncle Das Finance and Wisdom Diary, enterprises will simulate core technology being disrupted. Like favorite follow, sudden tightening of policies and other scenarios. Like favorite follow, to assess their own risk resistance. Like favorite follow, when managing personal finances. Like favorite follow, you can also simulate unemployment for a year. Like favorite follow, and a 50% market crash. Like favorite follow, to see if your asset portfolio, like favorite follow, can support basic living. Like favorite follow, the core of stress testing, like favorite follow, is not to predict whether extreme events will occur like favorite follow, but to assume that extreme events will happen. Like favorite follow, whether we can survive. Like favorite follow, as long as you can pass the most rigorous stress test like favorite follow, it means you have basic anti-fragility. Like favorite follow, Taleb emphasizes that, like favorite follow, focusing on vulnerability is more effective than predicting the future. Favorite follow, because the future is unpredictable like favorite follow, but vulnerability is visible. Like favorite follow, we don't need to know what the next black swan will be like favorite follow. We just need to ensure that no matter what the black swan is, like collect follow, our system can withstand the impact. Like collect follow, or even benefit from it. Like collect follow, this shift in thinking like collect follow, is the key to shifting from passive risk response like collect follow, to actively building anti-fragility. Like collect follow. Rule 4: stay away from pseudo-empiricism. Like collect follow, don't compare Ebola with falling from a ladder. Like collect follow, in a fat-tailed world like collect follow, the most hidden trap is pseudo-empiricism. Like collect follow, using the experience of the black swan world like collect follow, to measure fat-tailed events like collect follow, using the probability of daily events like collect follow, and extreme events, like collect follow. Taleb severely criticized this thinking in his book, Like collect follow, comparing the fat-tailed event of Ebola virus fatality rate like collect follow with the fatality rate of falling from a ladder. Like collect follow, it's like comparing the weight of an ant to an elephant. Like collect follow, it's meaningless. Like collect follow, the core misunderstanding of pseudo-empiricism like collect follow is the confusion of average and extreme. Like collect follow, and extreme events. Like collect follow, the average state like collect follow is the event of average stand like collect follow, such as height, weight, and falling from a ladder. Like collect follow, which have limited and quantifiable effects. Like collect follow, the impact of extreme values on the whole is minimal. Like collect follow, extreme steins like collect follow, which is the event of extreme stan. Like collect follow, such as Ebola epidemic, financial crisis, and war. Like collect follow, whose impact is infinite and unquantifiable. Like collect follow, a single extreme event can rewrite history. Like collect follow, the statistical properties of these two types of events are completely different. Like collect follow, and cannot be measured by the same standards. Like collect follow, for example, someone once claimed based on historical data like collect follow that the number of deaths from the Ebola virus is far less than that from diabetes. Like collect follow, so there is no need to worry too much about Ebola. Like collect follow, this comparison ignores a key fact. Like collect follow, diabetes is an average event. Like collect follow, the annual death toll is relatively stable like collect follow, and there is no exponential growth. Like collect follow, but Ebola virus is an extreme event. Like collect follow, it has a doubling effect. Like collect follow, once out of control like collect follow, it may evolve from a local epidemic to a global pandemic. Like collect follow, the death toll rises exponentially. Like collect follow, similarly like collect follow, at Uncle Das Financial Wisdom Diary, some people think the probability of plane crashes is lower than car accidents. Like save follow, so flying is safer than driving. At Uncle Das Financial Wisdom Diary, so flying is safer than driving. Like save follow, but they ignore that plane crashes. Like save follow, are extreme events. Once they happen like save follow, they lead to catastrophic consequences with all souls lost like save follow. Whereas car accidents are average events. Like save follow, mostly minor accidents. Like save follow, another manifestation of pseudo-empiricism is like save follow, using historical data to deny the possibility of extreme events. Like save follow, for example, before the 2008 financial crisis like save follow, many investors like save follow based on market data from the past few decades like Save Follow. Believed that house prices would not fall nationally, like Save Follow, but falling house prices are a black swan event, like Save Follow. Historical absence does not mean future absence, like Save Follow. For example, before the pandemic like Save Follow, many companies based on historical sales data like Save Follow believed that offline retail would not suddenly halt, like Save Follow, but the pandemic, a black swan event like Save Follow, directly shattered this empirical judgment, like Save Follow. Taleb emphasizes that like Save Follow, historical data is limited like Save Follow, and the intervals of outliers like Save Follow may far exceed our observation period, like Save Follow. To steer clear of pseudo-empiricism like Save Follow, the core is to follow two principles. Firstly, like Save Follow, never compare events in the average world like Save Follow with extreme events, like Save Follow, whether in terms of probability or impact, like Save Follow. Secondly, don't rely on historical data like Save Follow to judge the possibility of extreme events like Save Follow, but focus on the multiplicative effect of events like Save Follow and their unendurability, like Save Follow. At Uncle Das Financial Wisdom Diary, for example, when assessing epidemic risk like Save Follow. At Uncle Das Financial Wisdom Diary, the focus is not on the historical death toll like Save Follow, but its spread rate. At Uncle Das Financial Wisdom Diary, but its spread rate, like Save Follow, and its impact on the social system. At Uncle Das Financial Wisdom Diary and its impact on the social system, like Save Follow. When assessing financial risks like Save Follow, the focus is not on the historical maximum decline like Save Follow, but the leverage ratio and liquidity risk, like Save Follow. When evaluating corporate risks like Save Follow, the focus is not on the largest loss in history like Save Follow, but the degree of dependence on a single resource, like Save Follow. In real decision making like Save Follow, we can use a simple test like Save Follow to avoid pseudo-empiricism, like Save Follow. If an event like Save Follow may lead to unacceptable losses like Save Follow, no matter how low its historical probability is like Save Follow, must be considered a risk, like Favorite Follow. Take preventive measures, like Favorite Follow. But if the loss of an event is limited like Favorite Follow, and controllable like Favorite Follow, even if the probability is high, there is no need to worry, like Favorite Follow. For example, for the risk of nuclear leakage like Favorite Follow, no matter how many times it has happened in history like Favorite Follow, we must invest sufficient resources for protection, like Favorite Follow. For colds and fevers like Favorite Follow, even if it happens every year like Favorite Follow, there is no need to panic too much, like Favorite Follow. This is the specific application of the precautionary principle in a fat-tailed world, like Favorite Follow. Taleb's 4 survival rules like Favorite Follow constitute a complete system from the underlying logic like Favorite Follow to avoiding pitfalls in thinking, like Favorite Follow. Risk sharing like Favorite Follow. Risk sharing is the underlying constraint to ensure strategy's sustainability, like Favorite Follow. Risk sharing, barbell strategy, like Favorite Follow. Risk sharing is a resource allocation method to deal with uncertainty, like Favorite Follow. Risk sharing, focusing on vulnerability, is the core thinking of substitution prediction, like Favorite Follow. Risk sharing, avoiding pseudo-empiricism, like Favorite Follow. Risk sharing is the key criterion to avoid traps, like Favorite Follow. The essence of these 4 rules like Favorite Follow is to give up the pursuit of certainty like Favorite Follow and embrace the asymmetric benefits in uncertainty, like Favorite Follow. Don't pursue being right every time like Favorite Follow, but limit the loss when wrong like Favorite Follow, and infinite profit when right, like Favorite Follow. But to truly practice these rules like Favorite Follow, we also need the corresponding mental support, like Favorite Follow, because in reality like Favorite Follow, the conservative part of the barbell strategy may not make money for a long time, like Favorite Follow, which may make us give up, like Favorite Follow. Focusing on vulnerability like Favorite Follow may make us seem overly cautious, like Favorite Follow. Avoiding pseudo-empiricism may make us different like Favorite Follow, and face the pressure of conformism, like Favorite Follow. Therefore, to survive in the fat-tailed world for long like Favorite Follow, not only do we need the right strategy like Favorite Follow, but also a suitable mentality, like Favorite Follow. Cognition, anti-fragility. Next part like Favorite Follow. Cognition, we will discuss like Favorite Follow. 3 key mindsets for living in a fat-tailed world, anti-fragility. Like Favorite Follow. Cognition, accept uncertainty, anti-fragility. Like Favorite Follow. Cognition, embrace convexity, anti-fragility. Like Favorite Follow. Cognition, practice risk sharing, anti-fragility. Like Favorite Follow. Cognition, let's move from knowing what to do like Favorite Follow. Cognition, to being able to persist in doing it, anti-fragility. Like Favorite Follow. Cognition, and truly integrate anti-fragility into daily decisions, anti-fragility. Like Favorite Follow. Like Favorite Follow. In a world dominated by fat tails like Favorite Follow, While a sound strategy is crucial like favorite follow, it's the mindset that can stick to it long term that truly determines the quality of your life. Like favorite follow is the core that determines the final quality of life. Like favorite follow, we don't need to be seers who can predict the future with pinpoint accuracy like favorite follow. But we do need to cultivate a mindset that adapts to uncertainty. Like favorite follow, embrace the inherent nature of the world and welcome the asymmetry of gains. Like favorite follow, and practice the inseparable bond between responsibility and risk. Like favorite follow, these three mindsets will help us transition from passively reacting to risks like favorite follow to actively navigating uncertainty. Like favorite follow, the first key mindset, accept uncertainty. Like favorite follow, let go of the obsession with finding definitive answers. Like favorite follow, Uncle Das Financial Wisdom Diary. We always tend to like favorite follow. At Uncle Das Financial Wisdom Diary, seek the absolutely correct answer. Like favorite follow, at Uncle Das Financial Wisdom Diary, for instance, this stock will definitely rise like favorite follow. This industry will always be stable. At Uncle Das Financial Wisdom Diary, like favorite follow. But the essence of this unpredictable world is in fact unpredictability. Like favorite follow, extreme events occur without any discernible pattern. Like favorite follow, historical data cannot possibly encompass every scenario. Like favorite follow, so-called definitive answers like favorite follow are merely illusions of self-consolation. Like favorite follow, the core competency of top decision makers like favorite follow is never about predicting with perfect accuracy like favorite follow, but about being able to withstand mistakes. Like favorite follow, they don't agonize over what the future holds like favorite follow, but ensure that no matter what happens like favorite follow, they can remain in the game. Like favorite follow, just like Buffett like favorite follow, who never predicts market turning points like favorite follow, but by maintaining ample cash reserves like favorite follow, he adheres to a safety margin. Like favorite follow, he has weathered numerous financial crises unscathed. Like favorite follow, accepting uncertainty like favorite follow isn't about giving up or resigning yourself to fate like favorite follow, but about releasing the grip of the need for perfect predictions like favorite follow, and focusing on building anti-fragile systems like favorite follow. This allows us in the face of the unknown like favorite follow to have the space for continuous experimentation and adaptation. Like favorite follow, the second key mindset, embrace convexity. Like favorite follow, seek asymmetric upside. Like favorite follow, convexity is the heart of Taleb's anti-fragility concept. Like favorite follow, in simple terms like favorite follow, it means being tolerant of mistakes like favorite follow, and rewarding correctness. Like favorite follow, small losses are acceptable like favorite follow, but significant gains must be firmly seized. Like favorite follow, in a fat-tailed world like favorite follow, linear thinking has long been obsolete. Like favorite follow, only convexity like favorite follow can allow us to profit from extreme events. Like favorite follow, at Uncle Das Financial Wisdom Diary, for example, buying options is a classic convex tool. Like favorite follow, at Uncle Das Financial Wisdom Diary, the loss is limited to the principal. Like collect follow, once encountering extreme market conditions at Uncle Das Financial Wisdom Diary like collect follow, the gains have no upper limit. At Uncle Das Financial Wisdom Diary like collect follow, in personal development like collect follow, trying a side hustle in your spare time is also a convex strategy. Like collect follow, limited time and energy invested. Like collect follow, if you can seize the industry trend like collect follow, you may achieve a leap in income. Like collect follow, embracing convexity like collect follow is to actively design a pattern of small losses and big gains. Like collect follow, and reject the mediocre choice of symmetrical gains and losses. Like collect follow, within the acceptable risk range like collect follow, leave room for extreme returns. Like collect follow, make uncertainty our friend like collect follow, rather than an enemy. Like collect follow, the third key mindset is to share risks. Like collect follow, and stay away from the trap of empty talk. Like collect follow, Taleb repeatedly emphasizes that like collect follow, advice without risk sharing is empty talk. Like collect follow, and strategies without risk sharing are fragile. Like collect follow, to judge whether a decision is reliable like collect follow, and whether a suggestion is credible like collect follow, the core standard like collect follow is whether the proposer takes the corresponding risks. Like collect follow, if a financial advisor recommends high-risk products like collect follow, like collect follow, such advice is not worth listening to. Like collect follow, if a corporate manager gets a high salary like collect follow, but does not bear the responsibility for company losses like collect follow, such a decision is likely to be short-sighted. Like collect follow, practicing risk sharing like collect follow, for individuals like collect follow, is to ask yourself more when making decisions if something goes wrong like collect follow. What will I lose? Like collect follow, refusing to speculate on empty gloves and white wolves is like collect follow, is to deeply bind the interests of decision makers like collect follow. Avoiding the fragile structure of profits to oneself and risks to others. Like, collect, follow. Only under the constraint of risk sharing, like, collect, follow, can we remain rational and prudent, like, collect, follow, and make truly long-term choices. Like, collect, follow. 3 mindsets, like, collect, follow, essentially reflect a deep acceptance of the fat-tailed world. Like, collect, follow. Accepting uncertainty is at Uncle Das Financial Wisdom Diary cognitive premise. Like, collect, follow. Embracing convexity is the logic of returns. At Uncle Das Financial Wisdom Diary, like, collect, follow. Practicing risk sharing is the behavioral bottom line. At Uncle Das Financial Wisdom Diary, like, collect, follow. When we stop obsessing over predicting the future, like, collect, follow, but focus on building a system that can afford mistakes, like, collect, follow. Responsible life system, like, collect, follow. You will find that, like, collect, follow, the fat-tailed world is not a trap full of threats, like, collect, follow, but a soil that contains excess opportunities. Like, collect, follow. After all, true safety is never without risk, like, collect, follow, but having the ability to continue to grow in risk. Like, collect, follow. Finally, you may ask yourself whether, like, collect, follow, are you pursuing certain mediocrity, like, collect, follow, or embracing the uncertainty and excitement? Like, collect, follow. Okay, that's all for this book. Like, collect, follow. Finally, congratulations on finishing another book. Like, collect, follow.